All right. Good evening, good morning, good afternoon, wherever you are on this awesome planet. Welcome to the Inner Circle Live Asian session. I'm your host for this evening session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And we're definitely happy and grateful for all of you being here with us on this Thursday as we look to close out the week. So, hey, without further ado, let's make sure, all right, and get right to it. Let's turn off any and all distractions. Grab a pen and paper, take lots of notes, and let's make sure that we participate and engage for this evening session. You all have been awesome so far in 2023. We're definitely excited for an amazing year. So, everybody, if you can hear me loud and clear, as always, let's do a quick sound check. Drop me a 1 in the chat. Let me know that you are here. Let me know that you are with us, and we can get this session going. Awesome. Ryan, good evening, sir. How are you? One second.
Good evening, bro. Can you hear me?
Yep, I can hear you now.
I'm
I can
doing
hear you
well,
loud
man.
and clear.
Awesome. I'm doing well. How are you?
Doing great. Doing great. Looking to wrap up the week. Got big data coming out tomorrow.
Yeah, man. I think it's going to be a pretty interesting but big day, especially
Yeah.
with the numbers that came out today. So
Hey, right. You nailed it. Right. So let's talk about that for a minute. So oh man. All the back and forth. Hold on one second. Let me make sure everybody is make sure we are all good. Right. So I think everybody has control of their microphone. Brandon, you need an updated version of Zoom is what it's telling us. So I can't give you control of your mic, but definitely if you have questions, make sure that you put it in the chat. All right. So we just ask, hey, if you're not asking a question, making a comment, please leave your microphone on mute, right? Out of respect for everyone else. All right. So Ryan, ADP.
man.
So all right. Now we know this thing is not always a direct correlation because with the ADP, we're talking about private sector jobs, but hey, the bottom line is that it came in higher than expected, right? 235K on 152 forecasted, so came in above, okay? And then, right, to top it all off, the unemployment claims came in lower. So,
Yeah.
hey, they say don't bet against the Fed, right? And Chairman Powell's been talking about a sticky labor market for quite some time now. Tight labor market, right? You hear him say all the time.
Yeah, and it also speaks to kind of some of the sentiments from the meeting minutes yesterday, right?
Mm-hmm.
Don't move too early, don't be too hasty, right?
That's
With
it.
that coming out like that, it directly correlates.
Yep. That's exactly what they've been talking about. So let's talk about it, everybody. So for everyday workers, right? That's a positive. That is a positive, right? Jobs, private sector, 235K on a forecast of 152. Unemployment claims came in under forecast, right, which is positive. 204 on a projected forecast of 230. So seeing that number, somebody out there talk. Take your phone, your microphone off mute or whatnot. Is good for workers, but if we put our investor hats on, right, and thinking about the stock market, things like that, you're an investor. Somebody tell me, what are you thinking right now? What are you thinking in regards to these numbers as it relates to the markets?
I'll say something.
So, yeah, absolutely.
Yeah, I think the numbers is good for the average worker because they will get income in their pocket, but on the economic level, more money will flow into the market and interest rate is might be increased in order to control inflation. And I think on the stock market, that one I'm not sure, but I think price might go down since investors might not get good return. I don't know if that makes sense.
Yeah, it makes perfect sense. Make perfect sense. And you are spot on with that, right? So good for work is good for employment, but we already know we have a tight labor market, right? Sticky labor market in regards to inflation. So with our investor hat on, right, is exactly what you said. Investors are thinking, wow, that's just another key data point to support the Fed's narrative. Ryan was just talking about that we need to keep interest rates higher for longer, right? Because the ultimate goal is the Fed needs to tame inflation. We talk about it all the time, getting that genie back in the bottle, and they need to cool the labor market, right? So you hear Chairman Powell in his meetings, press conferences talk about we're not quite feeling that pain in the labor market. So this data, just like Ryan was saying, just like you just said, right? It supports the narrative of continued rate hikes for longer, right? And to hold those rates. So you can hike them some more, but then how long are they going to stay at those levels? Okay, so that's why that's important. Okay, so what now? So if we're talking about raising rates, right? Here in the United States, continue to raise rates, keep them at higher levels for longer. Interest rates are usually, somebody tell me, positive. Interest rate hikes are usually positive or negative for the currency. Talking about the US dollar, positive or negative, right? Currencies in general, let's talk about the dollar. Somebody tell me, positive or negative?
Positive.
Positive, right? Strength, right? In the currency, okay? So that's why those numbers are important. So if we go over, okay, and we look at the DXY, okay, technically now, from technical perspective, we see the push-off support. Okay, talking about it yesterday, we need a catalyst. Right? We need a catalyst. So now you got this bullish push-off support. Okay, so for the week, dollar showed some strength. Okay, so if we come down, right, we can see here we had a bullish day, still kind of in that range, but we got some positive momentum. Now, with all that being said, we have tomorrow's job data coming through. Okay, on Friday. Okay, we've got non-farm payroll. So while we're looking at ADP private sector, okay, we're looking at tomorrow's job reports from the government, which is a much broader perspective than just private payrolls. So it'll be interesting if that falls in line with what we saw out of the ADP reports, where we get a totally different number. Ryan, I know you can speak to this. Over time, these two numbers do not always correlate.
Not at all. Sometimes they are completely opposite. So
yes,
it makes it adds another layer of I'll call it excitement to the story.
It does. It definitely does. So now, what the Fed is going to be looking at tomorrow, right? They're going to be looking at those numbers to judge pretty much whether the labor market that is already tight is starting to show signs of any type of signs of weakness, right? Looking at the various sectors, any type of weakness or softening, as they say, right? So I think right now the Fed expects the unemployment rate to, I think it's let me see, where we at? 3.7%, right, for the unemployment rate. Okay, 3.7%. So we'll see what happens with that tomorrow. So very, very important. First Friday every month, we got non-farm payroll, unemployment rate, hourly earnings, and we've got Canadian unemployment rate and employment change as well. So this is how the technicals and the fundamentals come together, especially when we're looking at overall strength in market and market direction. Okay, so just wanted to go over that, but also tomorrow, we've got to pay attention to this ISM services PMI report. Okay, This is tomorrow. This is this is at 10 a.m. This is the non-manufacturing for PMI. It's going to be December's reading. So you can see here, at 10 a.m. tomorrow, they're expecting to come in at 55. So starting to come in below the previous at 56.5. So that's going to be interesting tomorrow to see how that number comes out. So what this report does is it's going to track the overall economic condition of the non-manufacturing sector. Okay, so what they do with this is tracking business activity, new orders, employment, and supplier deliveries, right? And the way they do this is they survey, right? A ton, right? So it's compiled mainly from what they do is they send out surveys, right, with a lot of questions, okay, and they send this out and they ask more than 370 purchasing and supply executives. This is how this works. This is how they compile the data. Right? So to send out these questions, I believe it's more than 370 purchasing execs the last time I read about it. And it covers over 62 different industries. Okay, and so they're trying to get a read on the overall health of the economy for the non-manufacturing sector. Okay, so of course a higher than expected number is bullish, and a lower than expected number is bearish. Right, so all these numbers are important, whether you're a long-term swing trader or short-term scalper intraday trader. You definitely want to know that these reports are coming out and being released, because a lot of times you don't want to try to trade around these times. You want to kind of wait for the dust to settle, because it can get volatile. You can get whipped around, right? A lot of accounts get blown when these major reports come out. So you always, first thing I do when I get up in the morning is I make sure I come to the Forex Factory. There's various different sites that have these calendars, but whatever one you use, you want to make sure that when you get up in the morning, or whatever time, right, you look to trade, you want to check to see if there's anything fundamentally being released in regards to reports that can cause a lot of volatility in the market. Everybody follow me on that. Drop me a 2 in the chat. All right, be disciplined. All right, be disciplined. Okay, so you might not have a total understanding of everything, but you definitely want to know, right, when these reports are being released. Okay, so very important data coming out, right, to get the year started. But that's cool, right? The great thing about the market, as we always say, is that hey, in the Forex market, right, you can make money on the upside and the downside. A lot of liquidity in the market, so that's the great thing. So jobs report 8:30. Services data, ISM non-manufacturing PMI 10 a.m. And also, we're looking at the factory orders again, just to mention that, for November, right? So they're looking for the last reports I was reading, analysts are looking for a decline in factory orders of 0.8%, and that was compared with a 1% gain from the prior reading. And if it does decline 0.8%, it'll be the first negative reading since July. All right, since quite some time. So yeah, so that is pretty much it on the fundamentals front. Any questions in general? No?
No.
All right, good, awesome job, everybody. So again, just a quick look at the dollar. We got a bit of a boost, right? Kind of still, when you look at it from a daily perspective, still playing around in that range. We'll see tomorrow, as a result of non-farm payroll, if we stay in that range and push back down, or if we start to get some bullish momentum to break us through this zone, right? So that's the wait and see. Nobody knows. Overnight, usually before these big reports, you may not get as much price action, right? I mean, it's less volatile during the Asian session anyway. But even moving into your London sessions and things like that, and your US crossover, the market can kind of pause on you until everybody starts to get a read on these reports, okay? And it's Friday, all right? So just keep that in mind. Continue to be patient, okay? Continue to be patient. Another thing I wanted to talk about is what's going on in the Eurozone, right? In regards to just looking at the Euro USD, right? And how we got strength out of the dollar, and we see price bouncing around a bit in that same zone ahead of tomorrow's non-farm payroll. But here's the thing: the ECB, right? Their view is fairly hawkish right now, right? We've seen a nice run with the euro, okay, up into these levels, right? And we see we've got a correction off that level today with the dollar strength, but they've been fairly hawkish. So in regards to especially their monetary policy, okay. So we just talked about it, monetary policy. If they are hawkish and they're looking to continue to raise rates to combat inflation, then you typically see, right, eventually see the yields, right, government bonds and the yields, like we talked about a lot last year, start to creep up, right? In order to get those bonds, right, and to get those rates, there has to be an exchange, right? There has to be an exchange. So you look at euro strength, right? So a hawkish ECB, European Central Bank, you look at euro strength, okay, and it's making a run, right? Things are starting to get priced in. But at the same time that you have a hawkish ECB, that type of hawkishness could lead to a decline in growth as well, overall growth. So it could kind of neutralize each other, right? So extreme hawkishness, right? Got to get these rates up to combat inflation, kind of trying to get it back towards that 2% level, right? That benchmark that central banks like to set, but at the same time, it could stifle growth. Okay, so you're talking about a stagflation situation. But so when you look at this Euro USD setup, I think all roads lead right back to the Fed. Okay, now the US Fed is keeping a hawkish tone, so you're thinking strengthen the dollar, but you have a lot of investors out there speculating that at some point this year, the Fed is going to pause rates, going to have to pause rates, right? And then eventually start to cut rates. Okay, so if that scenario occurs, then by way of dollar weakness, okay, as a result of pausing rates and eventually cutting, you'll see the euro eventually continue to move to the upside, okay, and start to break through some of these higher levels. If that scenario does not play out and the Fed, right, keeps their word in regards to, right, being data dependent, looking at the numbers like numbers that came out today, and the data points continue to support interest rate hikes and also to keep those interest rates at a higher level for a longer period of time, then you'll see dollar strength and then this will start to drop. Okay, so that's more the medium to long term perspective. So I just wanted to make sure that I went over that, right? Since this is a highly traded currency, right? The highest, I believe. So that's just a couple of scenarios I wanted to run by you guys on the Euro USD as we've seen this huge direction. And now we've kind of got this pause and then a slight move to the downside today as a result of, right, the payroll reports and things like that came out. Any questions on the Euro scenario right now? And then, of course, we know we have the war, right, still looming, okay? Still in a war, okay? Which is impacting the world, let alone the Eurozone, okay? So that's where we are on that. What I want to do, let me double check. Do we have any questions? No? Okay. All right. So what I want to do is I want to go back as we wrap up the brief and take a look at some of the setups that we've been participating in, some of the markups as the week has gone on. We've been posted in the Discord, right? Great job, everybody who's been able to get over and make that transition to Discord. We definitely appreciate you doing that. We definitely don't want to inconvenience anybody. So Ryan worked hard, right, to try to make that transition as smooth as possible. And it looks like so far so good. So we appreciate all of you hanging in there with us on that. Now, I believe the last setup, let me click on Discord, right? Is this pound Swissy on the 15 that Ryan marked up earlier, 80-20 play. Okay. And if there's anybody in there that's not connected to the Discord, make sure to reach out to us, get connected, so we could get you set up. But it seems like everybody is doing a good job so far. So let's look at this pound Swissy on the 15-minute and see where we are. So we come into the 15-minute here. You can see how it is pressing right to that upside. There's your 80-20 swing. Okay. Here's our sweet spot zone. Okay. Like so. Right. Here's the sweet spot. There. Okay. There's that sweet spot back to at least that 382 or higher. So we've got a down AB boundary. We have a very shallow retracement, less than the 236. Right? See how price, right? Didn't get the 236 there, broke, right? And broke through, broke back past that B boundary. There's the sweet spot. High percentage, right? Play there. And we see price trying to work his way back to that 382. Okay? So what you do, either on your 15 or your 5, right? You could deploy your trend lines if you're looking for, right, that risk to reward, okay, type of scenario. You could play your trend line break. Oops, right. This here, right? So you draw your trend lines, work your way down. Your levels, I'll take it from there. That. And we work our way straight down through that lowest point so we can catch the break. Okay, so you can see now, price broke your trend line, you can put your stop below the low. All right, however you want to play it. Okay, I know a lot of people who say they like super tight stops. Hey, I got a bullish candlestick that broke through. Some people put it below that candle. Boom. Well, you got stopped out there. Some people are cool with that because they look to get back in on the trade. Right? I like giving trades room to breathe. So I'm playing trend line breaks. I'm looking to put that stop below the last swing low prior to the trend line break, like so. Boom. Okay. And then I'm going to look to take a bullish candlestick break. Okay. There's my stop. Call it 35 pips. My TP, right there. TP1. Okay. Around 30 pips. And then we move to TP2. Like so. Like that, right? So if you want to play it tight like that, all right? If you're trading super small, divide your risk by your stop loss. Bang, put your stop loss at the D, let it float, right? Wider your stop, the smaller lot size you're going to trade by, right? Using the math that we talked about last, right? So it's totally up to you. I really like trading it, right, with the break and then getting in on the position and letting it go, all right? So that's the pound switchy there on the 15, and it's tracking pretty good, right, to the TP. So we'll see how that plays out as we look to close out the week tomorrow. Any questions on that setup?
No.
All right. If you want an even tighter position, all right, you can minimize that a little bit. That's the cloud break. Let me take this just back to my regular chart. Okay. All right, you come down to your 5. You could go from your 15 to your 5 minute. All right, no problem doing that. Once you, I got too close. So once you get used to it and you gain that understanding that, hey, this market moves in waves, these lower time frames, right, don't bother you as much once you realize that it's all really the same price action, right? So there, okay, and then we can work to bring it down. These Swissies, man, that price action is funny. It's choppy. Swissy pairs are choppy, like that. Trying to work it through that lowest point, and you can see on the 5 here, okay, here's our lowest point, see? you want it tighter than what we had on the 15, you notice price action is moving in the same direction, just smaller waves. Okay. So now you look to run your trend line like this. Boom. And now, right, here's a tighter position. Okay. Like that. See? Like so. Play it off the break. There's the completion of your swing low. See, look, here's our center point, center candle low, 2 to the left, 2 to the right. Bullish break of the trend line, take the trade. Right? You've got your risk figured out. Hey, if I lose this trade, right? That's the beauty of the math, right? If I lose this trade, if I'm risking 1%, I'm only out 1%, right? So that's the magic. If I have a stop loss of 100 pips, if I divide my risk by the stop loss, if my risk is 1%, even with a 100 pip stop loss, if I lose the trade, I'm out of 1%, right? My lot size is going to be smaller because I'm taking my risk and I'm dividing by my stop loss. Everybody follow me on that. Drop me a 3. I have to know that everybody is getting this. This is so important. I can't say this enough. So then it doesn't matter if you find a setup in a sweet spot, an area you like to trade. It doesn't matter if you find it on the daily, the 4-hour, the 15-minute, the 5-minute. The approach to your risk management is the same. If I'm on a 4-hour chart, okay, if I come out, right, and I'm on a 4-hour chart, like this could have stayed down below, but if I'm on a 4-hour chart and if I'm on a 4-hour chart and find some room up here, okay, and I have A, B, C, D, right? So boom, okay, pull my fib out, bang, swing low to swing high. Say I find a spot trade in my swing we talked about. Say I put my stop loss below my A. Okay. Like this. And I'm in the target zone of a 61 in. Well, that stop loss is below my A. Call it 30 pips. Okay. If I go down 30 pips, so I'm going to take my 1% or 2% of whatever I'm risking, and I'm going to divide it by the 30 pips on the 4. Okay. If I come down to a 15-minute chart or a 1-minute chart, and my stop loss now becomes half that at 15 pips, I'm going to take that, my risk, divided by the stop loss 15 pips, and guess what? I'm going to be able to trade at a higher lot size. But if I get stopped out, I still only lose the 1%. So it's the same thing every single time, right? That's moving nice. Probably going to hit target, right? That's moving nicely. We got a high right there. We got a breakthrough. But it's the same math, right? It's typically when your trading gets boring and redundant is when you make money. Just been my experience. All these pairs, I'm looking for the same setup, same sweet spots, same risk management plan. So then it doesn't matter a pair anymore. It doesn't really matter. I know we have tip values and things like that, but that stuff is slight. Doesn't matter, right? Doesn't really matter in the grand scheme of things when you're trading big moves like this, right? It's beautiful. That's a beautiful play. And guess what? As it reversed, what is it doing, everybody? It's making ABCD waves. Right? Got a 50% pullback there. If that holds, right? There's our 38.2. That's right in the same zone as our D extension. Right? It's pretty good symmetry there. Any questions on the pound Swiss?
No.
All right. Awesome. Now, let's go through what was the other one we took this week? We put in there, NZD USD. Let's check that out. See how that one's doing. Definitely, it's a dollar pair, dollar cross, so ahead of tomorrow. Okay, we looked at that on the 15. All right, and there's your play, right? Stops above the A. Okay. Doesn't take out the A, has no choice but to go your way. Right? Now, you can range stop tighter the price if you want to, right above that A. Right? We just place it to let you, we put this in to let you know, hey, this is where, right, area where you want to place your stop. If you're planning above the A, if not, you put it above the C. We got a deep 8-6 retracement, and you can see now that this is moving. Okay? So depending on where you got in the zone, straight off the 8-6, right, at the lowest point, already down 125 pips, call it. Right now, where we're at, it's still over 100 pips slightly. Okay, so we've been through 2 TPs, and potentially we could get TP3. I don't know what's going to happen ahead of non-farm, if it'll have enough momentum to move to the downside. It may move sideways. If you're in this trade and you still have positions on, right, adjust your stops, move your stops in the profit. I like to take some money off the table. Okay? So if you're in it at 1 mini lot, $1, right? Maybe at this point you've taken 50% off the table. Right now you got 50% left in the game. Maybe it stops at break even. It's a risk-free trade for the remaining portion of your trade, or you've moved it into profit. So if it does reverse on you, then right, you get stopped out in profit. All right, but we can see that that's making some good progress to the downside, right? So these are pretty big moves, and you might be the type of person to say, you know what, I only need TP1 on the setup, I'm good, right? So however you want to play it, this is why we like to post the screenshot and the image, not just numbers, so you can kind of train your eyes to the type of setups that we like to look at. So as you start to develop as a trader, right, you can decide what works for you, right, and kind of develop an eye for it. So that's where we are on the NZD USD. So still playing around this 62.29 level. I am interested to see if that's just going to push sideways until we find out what's going on with non-farm tomorrow. But it's been a good ride for this week. So these 15-minute type of setups, we definitely like posting those because it can enable you to get in and out of the trade within the same week, oftentimes. Okay, when you start to get up around that 1 hour, 4 hour daily, right? Those can run. Those can carry over through the weekend. And we do post some of those swings as well. But these 15 minutes, dropping down to the 5 or whatnot, potentially for your entry, if that's what you like to do, could get you in and out of these trades within the trading. Any questions on the NZD USD?
No.
All right, appreciate it. Aussie CAD, right? Posted that one. I think that one pushed a little deeper. When those jobs numbers came out, I think it pushed to the downside, but it's still within the AB boundary. I was looking at that earlier, right? So posted that on the 15-minute. Yeah, that's a 15-minute potential C to D scenario, right? So we got an upward push, right, today. So originally, right? So if you're looking at how you draw your trend lines, originally, right, we got that break, okay? Didn't stay above it, turned over, pushed lower. So you always want to get your trend line through the lowest point. So at the point that we posted that in the Discord, this was your lowest point. So now that price has moved lower, you just run your trend line straight up like that. Bang. Okay. So this was the original move. Now, right, as long as it doesn't take out the A, it has no choice to go your way. So we'll see what happens tomorrow. It's moving sideways, right, at the 786. Okay. So if we get a break, and now I'm looking for at least, I want to see it get back above, right? Okay. So in drawdown on the position, but if it gets back above, right, those 1 hour levels, then we say, hey, right, we might be ready for the swing at this point. Okay. See? Like that. Okay. So this, and of course, you had your 80-20 play here. That was a huge move. Okay, that was a huge move to the downside. AB boundary, shallow retracement, 118, 127 zone, there's the reversal, right? So off that play, off your 127, your 382, 113, 618, 152, at its lowest point today, 189 out of that zone. Okay. So as you trade more and more and more, you'll start to develop what you like. You know what? I don't like C to D push this reversal, right? With the trend. Maybe I've discovered I like trading counter the trend, right? Those moves. And you may say, you know what? Every time I get on these charts on any time frame, I'm looking for 80-20 plays. That's it. That's going to be me. That's going to be my trade plan there in regards to the type of zone that I like to trade. Right? And then there's going to be some of you that say, you know what? No, I like deep corrections and pullbacks like here. Boom, into the zone, A, B, C, D. I like the C to D moves. Okay. All right. So you have to go through the ups and downs to discover who you are as a trader and exactly what you like. Okay. So that's where we are on the Aussie CAD. So we'll see how that plays out. It's moving sideways. We'll see what type of impact that jobs numbers may have on this tomorrow, because we got numbers coming out for Canada as well. Okay. So that definitely is going to push this either way. But here's the thing, right? Here's the thing. If, right, you follow the math that we gave all of you and say you risk 2% at this level and it continues down and stops you out. If you get stopped out, you lose 2%. If you do the math the same way every time. Okay? Larger stop, giving the trade room to breathe, stop below the A, but get stopped out, it should be 1 or 2%. That's it. No worries. Okay? Any questions on this Aussie CAD? Huh? All right, so let's go. I want to go back because this one is still running. This has been a monster. We'll enter on a lower time frame. You could if you wanted to play that, right? If you're looking at this area here, right? Doing top-down analysis, right? You're just zooming in as you move through the lower time frames. You could wait. You can wait. You can, whatever confirmations, like some people use moving averages, some people use, you name it, cloud. So it's out here. Like, okay, you see where you are? It's just moving sideways. It's not really giving us anything, right? But if you're looking at just regular structure, you could drop down to your lower time frame. But what I would do, again, what I would do at this point, right? Because if it is going to make that run, that C to D push, you've got time. I would say, you know what? It just broke. These are 1 hour levels. Okay. So it's like, hey, now, if you didn't take that initial entry and you're like, okay, well, if it's going to swing, then just wait, right? Let it come and let it retest, right? Before you get long on it, let it show you something first, that it wants to commit. Let it break through some levels, right? Same thing, right? And we started out talking about earlier in the week. Let it break and retest some zones, right? And then right, make the move. Okay. So when the other method, when I'm swinging, right, using large swings, and I have a directional bias, say, okay, and those of you who've been with us for a while, right, you know how we do this as well. If you're a limit order type of trader, so you may say, you know what, I'm bullish, I'm waiting on a correction, okay? So what I'm gonna do is, say I came out with my risk said I could trade at 1 mini lot, $1. You could say, you know what, okay, my sweet spots that I like to trade with the trend on these fibs. I love 61.8 and 7.86 retracements, right? 61.8 or deeper. So if I'm trading with limits, what I'll do is I'll come in and I'll just break that trade up. So, hey, my risk told me I could trade at $1. Well, I'm gonna put a buy limit at the 61.8, okay? So you can put a buy limit there. Okay. And then I'll put another buy limit here. Buy limit order, buy limit order. Okay. Like that. Like so. Okay. Buy limit order. So if my risk tells me at 1% based on where I have my stop, I can trade at 1 mini lot. I can just break it up. So this is going to go in here at 0.05, right? 5 micro lots, that's 50 cents. And this order here, 0.05 micro lots. Same stop. Okay. Same stop loss. So if price comes down and it swings, right? And it takes me in, right, at my level, cool. My projection is a 1.618. Price came to the 61.8, took me in at my buy limit, 1.618, the extension. Okay. If price swings and pushes deeper, just like it just did, here's my buy limit order, and my first buy limit order is going to be in drawdown. But hey, guess what? As long as it doesn't take out the A, has no choice but to go my way. If it pushes deeper to the 786, then if I get a 786 retracement, it's all about momentum. The deeper the retracement, the less momentum potentially to the upside. So if I get a 786 retracement, I expect a 1.27 D extension. So boom, okay? Now it's pushed deeper in the zone. So my TP level, I'm gonna adjust my take profit level, right? My 61.8 order, my TP level becomes this 127. So now my first order is in drawdown. It pushes deeper to the 78.6. It takes me in, boom. But that's okay, because if it doesn't take out the A, it has no choice but to go my way. So eventually, if it picks me up at the 786 and moves bullish, it's going to put my 61.8 order in profit, and away we go, like that. If it stops me out, I've lost 1%. That's it. Okay. That's it. That's it. Somebody had a hand raised. Chat. Calvin, question.
Hello?
Yep, you there?
Yes. What would be the best scenarios to use like a stop order?
Oh, okay. So you buy limit, right? Okay, so these are buy limit orders. This is saying, hey, right now, right, in this bullish move, price is above where I want to buy, right? Because we want to buy at a low price.
Yes.
Okay, we're gonna look at, right?
Yes.
Okay, so when you think about a buy stop, you could say, you know what? Price, for example, here, you could say, I always think of like a buy stop is like being at the bus stop. Somebody's gonna stop by and pick me up, right?
Yeah.
Standing on the corner waiting on the bus, price is gonna stop by and pick me up. Okay.
Okay.
So here we go. So with the buy limit, we're saying price, right, is currently above where I want to buy. I want a deeper discount, right? That's what these levels represent. My little energy trampolines here. Here's a 0 to 100% move. These retracement levels, right, is going to take back 23%, 32%, 38%, right, 50%, 61.8%. I want the deepest discount, right? When we go to the store, right? We love Black Friday, right? We want a discount. So this is just representing, I want a low price, a discount for me to buy, okay? So price has reached this limit on the sell side, and I'm looking to buy limit. You can say,
You would still, I'm sorry, you would still have the same stop loss?
Yep. Because I've worked that out. I've worked that risk out.
Okay.
Right. So again, right, if my stop loss, I take my risk percentage and I divide it by my stop loss. Right. That's the key. That's the key. I divide my risk by my stop loss. That's going to give you my lot size. So in this example, hey, my risk said I could trade at 1 mini lot. Well, I'm going to use limit orders. So I know that it could possibly, I like these. This is my sweet spot zone. I don't control price, but my bias is in the upward direction. As long as it hangs within this AB boundary, it has a chance to move my way, right? So if I buy limit orders here, if price comes down, it takes me in, that order is automatically gonna activate. My stop loss is in place for both of them. It's gonna activate, it's gonna take me long. If not, I've got to protect the stop. So here, when you talk about a buy stop, you could say, you know what? Okay, well, this price is kind of consolidating. And you could say, this is pretty much like this, right? This is just consolidating. And you could say, you know what? If I get a break above this 91.92 level, right, I'm willing to get in above that level. I'm not taking that trade until I get above that level. So I can come in and put a buy stop, right? So I'm waiting at the bus stop. And if this price moves in a bullish direction, right, it can stop by and pick me up. Boom. That's my buy stop. Yeah.
Okay, I mean, I appreciate that.
Yep, you're welcome. That's my buy stop. So price is currently below where I want to pick up and buy. Okay. So that's that. And then you always have your protective stop. Okay. So if price moves up, it's like, hey, this is my trade idea. I want to get long. I go on my phone or on my computer, MC4, whatever you use. Instead of me putting in a market execution, I'm gonna go in. So when you go market execution, it's gonna give you two zones. It's gonna tell you to type in your buy stop. Type in your stop loss, and it's gonna tell you to type in your take profit, right? But if you go and you put in, you say, I want to put in a buy limit order, it's gonna ask you. So instead of hitting market execution, tap that drop down and say, you know what? I want to buy limit order. It's gonna ask you for the buy limit order number, price, right? So if I want to put a buy limit in right here, okay, at my 61.8, that price is 91.84. So I'm gonna say buy limit, okay, price 91.84, stop loss 91.11, take profit 93.29. Boom, it's in my phone, right? So if I'm gone and I'm away, I'm eating dinner, whatever, out shopping at work, I've got that trade set up. And over the time, whenever price comes down to this level, it's gonna activate that trade. But you're already protected. You're already protected. You got your stop loss in. You've planned and won the war before it started. That's the key. That's the key. Never take a trade without calculating your risk first and having all your parameters. Right? So that's how you would do that. It would be the same thing with a buy stop. Hey, price is below where I want to get in. I see some key areas of resistance that I would be more comfortable with it breaking through. No, I'm not gonna be around my computer, right? I'm confident in my bias. I got my risk figured out. 1% if I lose, I'm gonna put a buy stop order, right? Above here, above this level. Price gets impulsive, moves and breaks, then it's gonna take me in and I'm gone, right? That's that. That's that. Any questions?
You can mention that calculation. You said risk divided by stop loss is equal to what?
Yeah, so you take the risk. Okay, you take your risk. Percentage, right? Risk. Do it again, right? What's going on? Oh, it's up. Risk divided by your stop loss equals your lot size.
Lot size. All right, got it.
Got it?
Yeah. Yeah, just trying to write everything down. So.
And these are recorded too in your back office if you ever need to go back in and check it out. Right? Hey, that's gonna tell you your lot size. That's gonna keep so you know no matter what, right? Again, whether if it's a 4-hour chart, daily chart, 15 minutes, if I keep that same formula and I only want to risk 1%, right? That's what it's gonna be. If I want to risk 2%, because then I always know in my head I'm risking 2% per trade. I have to lose 50 trades in a row to blow my account. If I risk 3%, I have to lose 33 trades in a row to blow my account. The issue is we don't stay disciplined. Right? You lose 33 trades in a row, we're gonna have to figure out some stuff. We gotta work on some things. Right? We gotta press pause. Hit that demo. Hopefully we've journaled to try to figure out what's going on. Think about that. 50 trades in a row. The problem is we don't want to, like psychologically, we don't want to trade small. And there's a lot of things that play on our psychology. I don't like my job. We pay enough money. Stuff I've seen on the internet, right? Just being. I've been through it. I've been through all of it. Ryan has to, right? Everybody, right? Transparent. I took some L's in this game, right? But I'm better for it, right? Ryan always says, give yourself grace, okay? So, but think about that, and think about how we blow accounts. It was funny. I was just talking to Ryan the other day because Ryan's my mindset coach, okay? So has been for a while now. I'm sitting up here like I'm working on a strategy, right, for the group that's really good in regard. We've talked about the cloud last year, and I'm like, on that NZD USD trade, it's the little things. Like I told myself, you know what? Because I'm like, okay, eventually you want to scale up, right? So maybe you say 1%, 2%, 3%. As you scale up, you say, you know what? I want more, a little bit more confirmation. I told myself, hey, it's in this zone. We posted it, right? And it worked out. NZD USD worked out. But I told myself, I'm working on this 5-minute confirmation with the cloud. Don't take the trade. don't take the trade no matter what until the 5-minute, until the cloud breaks on the 5 minute. Right? Don't take it. I said, okay. Benny, don't take the trade until the cloud breaks, and I know the exact spot. Okay? Until the cloud breaks on the 5 minute. Okay? So it doesn't matter at times, right? It's what's going on between your own 2 ears, right? It doesn't matter how many years of experience you have. Right? I'm working on this, like, look. So I said, I had it marked up. Okay. This is that NZD USD trade. I said, Benny, I've seen it move off the high, right? I'm like, man, that's a lot, right? On a 5-minute chart, like, I'm being patient, I'm waiting, that's a lot. It's already 30 pips to the downside. Benny, don't take the trade until price breaks the cloud. I took the trade before price broke the cloud. And look what happened. Boom. 30 pip drawdown. Okay. Now, luckily, my stop was above the level, above that high that we set up, right? So I was giving it plenty of room, but I'm just working on very disciplined with this cloud, right? Don't take it until it breaks. It didn't break it. Can everybody see that? This drop me one in the chat. Did price break the cloud? Answer is no. Didn't break the cloud at all. Pull back, then it broke the cloud. Then it broke the cloud. And it's been down ever since, right? But I put myself through this drawdown, right? Which when I'm in a swing, when I'm in a major swing trade, I don't care about that. But when I'm trying to master something else like this on this lower time frame, right, it's important to stay disciplined. That's a lot of draw on a 5, right, for the type of setup that I'm trying to play on. But eventually it went my way. But if I was leveling up and scaling up and going at 5%, right, that's a headache. That's an unnecessary headache. I just waited for the cloud to, right? So we know these things, right? That's why Mindset Mondays are important, because we know what we need to do. We know, hey, I should just be risking 1%, 2%, right, for this swing trade. Okay, I know I should be waiting on my trend line break. I know, right? And then we don't do it. It happens to everybody. That's why when we came together to form this group and have this vision, we came to the conclusion that one-off programs don't work, because it's about everything that happens after that. That's why we set this up the way that we did, at an affordable price, because we didn't want people to go through, I know what I went through, spend a ton of money for my education, and then realize that after I got done paying for that education, I didn't have any money to trade with. Right? Just being honest. And then when I realized that, man, I took the program, but it's all about what happens afterwards. I then had to go back and realize I need to be in this man's trade room on a regular basis to learn how to really apply this stuff. But then that was another couple $1,000s. But that's how I turned the corner. That's how I shortened the learning curve and compressed time frames. So that's how this whole idea came together, right? I connected with my partners because they experienced the same thing. It was just like, I need some mentorship. Can you help? Yeah, I went through that too. So this is why this is set up the way it is. You have training in the back office. That's a program in itself. And we're even working to revamp and update that to make it even cleaner and more to the point and more precise. That's a program within itself. But then it's everything that happens after that. The weekly rituals, showing up. This might not be an every night thing for you. Some people, there's a lot of people that are members that can't even get to this. They watch the recording, right? They're watching the recordings. That's cool too. But then your mindset Monday, to making sure your mindset is right, so you can work to develop yourself psychologically, so we can start to work past, right, some of these challenges that I was just talking about. And I'm only talking from experience. So that one program didn't do it for me. Why? Because how many people in this world have programs or what did I have a membership running on, Ryan? I was telling about that I had, they would hit me up so much, I had to look at my account. Beachbody. Listen. Beachbody on demand. right? The program, right? The program one off just didn't get it for me. I needed somebody, right, in my ear, working with me, right? Somebody that, right, believed in me until I was strong enough to believe in myself. That's the difference. That's what did it for me. Right? That's what did it for me. So that's the whole point in this setup and why we're here, right, on a regular basis to help everybody work through things. It's all systematic training. Do the training, come here, try to apply it, have your questions ready, mark up your chart, do your homework, send it to us, right? Post it in the group, send it to us, let us see it. Get the constructive criticism. Then it starts to come together. And then you learn this a lot faster than you think you can, right? And it's a process because then at some point, right, you get all of this down. Oh, Benny, I got the technicals. I understand the fundamentals, how they apply. Guess what? Psychologically, I now have to have the confidence to put my own money on the line and do this stuff. Think about that. Because it doesn't happen overnight. It doesn't. This is what we are passionate about, right? We think that this is the final frontier for regular everyday folks to figure this part of the game out. We figured out how to get up on the alarm clock and go to work every day, right? We figured out how to go make money and work and make money. But the idea of multiplying money, turning 10 cents into 20 cents, making money from money, it's the final frontier for a lot of people. Right? Yeah, it's real. It's something that we're passionate about. Like, yeah. Right? So life's work. It's life's work. Think about that. All right. As we move forward, think about your commitment level. Hey, do I really want it? Do I really want to become a pro at this? And I'll tell you now, it's worth it. It's worth it. Ryan, you back?
Yes, sir, man. That's it.
Yeah. So I know you're away. I covered some of the pairs. I wanted to wrap up the week like that. Didn't look for any really hot news settings because we got non-farm payroll coming on tomorrow. That's a big report. First Friday of the month, always big, right? So kind of expected the markets to move a little sideways. So I wanted to review the pairs, setups. So yeah, just in case you missed all that. Wait, go ahead.
No, man, what you said right there that's the key. All of that is the key, right? Being able to look over somebody's shoulder and see what they're doing and see how they're implementing, right? And then the extra perk is being able to get the feedback from the homework that you do in live action. That's what it is, man. But the only way to make progress, this is all confirming what Benny just said, which I don't need to do because it stands by itself. The only way to make progress is to take action. It's the only way to make progress. And in this space, that taking action means not only just going through the training, but implementing what you learned in the training, doing the homework, asking questions, doing more homework, practicing, opening a demo account, taking demo trades based on the homework that you did to implement again what you learned from the training that you just went through to get more practice, to build the confidence, to make the mistakes, to then come and ask the questions, to then make the mistakes again, to come ask the questions, to then be able to make the progress to take that one step forward. That's the key. You want a magic bullet? That's it. It's called work. It's called practice. It's called dedication. It's called following the process and trusting the process and respecting the process. That's it, man.
Hey, awesome session. Well said, Ryan. Great session. We don't do anything on Fridays, right? But we do have non-farm payroll tomorrow. So definitely be looking at some updates to be coming through the Discord, right? Links and things like that regarding the results of that non-farm payroll report and other employment numbers. But we will be back here, right? Forex weekly ritual, where we go through, knock down all the pairs, see where we are, and prepare for the upcoming week, Saturday, 7 a.m. Eastern Standard Time, right? And it's January, right? So we got a new setup, the links. So make sure that you check your inbox for it, all right? With that being said, have a great evening, everybody. Thank you so much for your time tonight.
Thank you.
You're welcome.